everybody. Good afternoon. I hope you're doing well. This is Sami from the Black Room. I've been kind of MIA, missing in action the last week and a half, but that's because I was in New York City doing the mentorship, where 9 students came to the class and traded with me for a whole week. It was an awesome experience, but I'm also happy to be back in my routine at home doing what I love, which is to trade. Wanted to talk a little bit about the market and the current market environment. I actually have a wide array of things that I wanted to discuss with you today. One of them is what I think about the market. And I recorded a video on October 4th titled Why I Think the Market Topped. The day before the market topped, this day, October 3rd, I had spent about 30 to 45 minutes in the black room discussing the market, and I went back to 2007, showed how the market topped. You can actually look up the video again on October 4th from the black room playlist on Facebook. I also did another video on October 10th, I believe. And today I'm doing another video. I realized the market, even though we had a big gap down, the market got bought, but I think still the damage that was done to the weekly, daily uptrend is going to be felt for some time to come. The truth is, if the market were to base out here for a while, it would even be more bearish than if it were to drop. So if it can continue to base, I think we'll see the moving average start. This is the 20-period moving average start to flatten out, point down, and then we'll have a nice sell-off to maybe 160 on the monthly chart. That's what I think. I wanted to share with you, though, before I forget, kind of what do we call it? A journal post that I wrote for myself, and I thought I would just share it with you. I meant to go over it in the black room today, but I didn't get the chance, and here it is from October 4th. Market top signs is what I called it, I guess. I noticed, I don't know about you, but when I'm scanning for swing trades after the close, I usually am watching, not watching, listening to music on YouTube, doing things like that. So when I was doing that, I noticed that there's a lot of new educators for some reason, probably that know nothing about the market, showing up. And why is that a market top sign? I bet you've never heard this before, but why is that a topping sign? Well, because I wrote in my journal, because the demand for stock investing is so high, demand and supply. Educators are simply meeting the demand. Now, if the demand is really high, it means everybody's bullish. If everybody's bullish and is already bought, it means we've topped out. There's no more buying. It's precisely the doubters or the ones that if as long as we have a group of people that are still doubting the market, doubting the economy, that's when the market continues higher. The moment everybody agrees the economy is doing really great, then we've seen the top. Okay, let's move on to the next point. Important figures such as Ray Dalio and people of his caliber. I noticed that they were coming out and saying we are not at the top yet. Why is that to me a sign that we are at the top? Because it means they're complacent. It means they think, okay, we're not at the top yet, and usually tops and bottoms leave everybody behind in the dust. So with that complacency, to me, that's a sign that the market is topped. I started getting lots of calls, text messages from friends and family members that know nothing about the market and investing, wanting to invest, wanting to get into the stock market. Again, more signs that the market really truly topped out. When I started talking about a possible top in the market, no one paid attention. The videos that I mentioned from October 4th, October 10th, probably had very low view counts. Why? Because nobody believed. No, probably still nobody believes that the market topped out. Again, complacency. Micro and nano cap stocks started getting bought like crazy, which is a huge, very, very strong signal that the market topped. Number six, everyone started talking about how good the economy was, but if you think about it, if it's the best it ever was, then it's priced in. We've seen the high. Does that make sense? These are not market top signs that you're going to be able to Google and look up. Those are just my personal experience of why I think this was the top in the market. And tops and bottoms are not always that obvious. They just aren't. Sometimes they are, and that's when they are, then they're easy. When we have a huge run up and we go climactic. Rarely happens. The last time it happened, when the market went totally crazy, went totally climactic, was in 2001, 2000, the year 2000, when we had the tech bubble. But in 2007, when we topped out, we didn't go climactic. In 2009, when we bottomed, we didn't really go climactic, like so. Does that make sense? So true tops and bottoms are leave everybody behind in the dust, and most of the time they're not obvious. They come almost out of nowhere. The market was basing, going sideways. That's the cues. And then all of a sudden, breakdown. And all of a sudden, big red bars, big gaps now. So definitely to me, this was the top in the market. I'm glad to be 100% in cash, and not today. Go back and watch the video on October 4th. I said I said the same thing back then. I'm 100% in a market fund, and so out of the stock market in my long-term investment account. I still continue to obviously play swing. Today, I had the McDonald's as an earnings play, long, and then I had the WAT, which I know got bought, but the exit was over at 174, 173.93, which is above the 5-minute bars high. So this was actually, why am I talking about it? Let me show you the newsletter itself. This is the newsletter that went out yesterday, October 22nd. Check it out. MCD long and WAT short. Those were the two that I selected. So today, and look at MCD. MCD got bought, even after the gap, got bought 7-8 bucks. Look at this from the open. So very, very nice couple of swing trades. As far as day trading, to be totally honest with you, the market volatility isn't always a great thing. And when I focus on gaps and the market is going crazy, it messes up the gaps. So the gap downs got damaged. The gap ups, well, the gap ups actually worked today, but initially I was focusing on the gap downs, and I ended up not doing much. I think the best trade that I had was the SLCA today, it, which was a 15-minute. This was called and played in the black room. It was a 1-2-3 short. I exited a little too soon on the front half, and in the back half over 55. But nothing big. I had unfortunately the CDNS um, into the at the end of the day, and I had 4,000 shares. It was working nicely as a short. Why? Because I like to play these huge movers that accelerate into the close. We didn't get an acceleration, but we did get the spike in volume and the pop. So I thought this is the top, and I shorted it, but I missed the exit, meaning I had 4,000 shares into the close, and I had to cover it in the after hours, which cost me 500 bucks. So that's the issue. Otherwise, this would have been probably. Here's my P&L for today. Nothing big. Again, the SLCA was my best. This should have been the best, but I messed it up. I missed the exit. I set the alarm. I usually have an alarm at 3:59. I mean, not usually. I have an alarm at 3:59 East Coast time, but because at 12:59 West Coast time, but because I was in New York last week, I had it set at 3:59, and so when I came back to the West Coast where I live, I forgot to change it to 12:59 Pacific time, so I missed the exit today, the end of the day today, and I ended up closing it in the after hours. I don't know what I did the last couple of days. yesterday? Let's take a look. Yesterday was nothing big because I'm not able to catch anything good right now. Um, and then the day before, I guess I caught one nice play, which was the YNDX. Let me show you the YNDX from Friday. It was a climactic buy, so two big wide range red bars. Let's take a look at the 5 minute. I was actually with the students in New York when I did this. So there it is. See it? No, I did it 2 days in a row. I did it on Thursday and on Friday. This is the play on Friday. And then on Thursday also was a nice play. So 2 days in a row, climactic buy. So that's what I'm currently doing. I heard Citron or Andrew Left is bullish on Tesla. I think Tesla is doesn't really look good to me. I wouldn't short it as an earnings play. I'm currently playing earnings. I wouldn't short it. We'll see how it sets up on November 7th or on November 6th because that it reports on the 7th. But as of right now, I wouldn't be bullish on it. To me, it doesn't look good. The monthly is totally damaged. So I think it comes in fact, to maybe 200. Having said that, I wouldn't do it because it's not an easy read. It's not like the McDonald's today or the W these two or the WAT in yesterday's uh, alert, right? Those were to me were easy clear plays. This is not a very clear play. What I do like about it as a long is the fact that I thought this was the top. Notice how it based for 1, 2, 3 years, and then it went higher. So that's really, really bullish. But it also is very, very sloppy on the monthly chart. And I think it's when it reports, we'll see how it's setting up on the 6th. But I think it's going to gap down. So today is the 23rd. So that will be actually 2 weeks from now, two weeks from today. Okay, exactly 2 weeks from today. We'll see how it sets up, but I think that this probably gaps down. All right, guys, that's it for today. I just wanted to share with you my own personal reasons why I thought this was the top in the market. It was a journal entry for me, but I thought I would share it with you. Um, Again, it's not based on some classical or classic ways of things, reasons why the market usually tops. It's just my personal observations of why I think the market tops. I hope you enjoyed it, and I'll talk to you sometime soon. Take care and happy trading.